Hey, it's TJ, your mortgage guy. Last week we started a series where we were answering questions that you guys asked and answering mortgage related questions that you had. So I got a question from a client that was curious about the ramifications of refinancing. So, for example, let's say you've been in the house for 10 or 15 years paying your mortgage, and then you decide to refinance a couple times over that period. How does that impact what you owe? Are you paying more interest up front? And what does that look like? So I wanted to kind of go over some of this. I did a kind of fictional scenario here, uh, assuming that you purchased the house for 300,000 and didn't put any money down. Assuming you've been paying on this loan for 10 years, this is what we would estimate your loan balance would be at a 7% rate. And again, this was initially a 30-year term. You've been paying on it for 10 years, so there's basically 20 years left. And this is the estimated payment. Now, I did two options to kind of compare, and we'll go over these numbers in more detail, but I just want to kind of show you, first of all. So let's just say you've been in it for 10 years, and then you refinance to a 30-year term. So, assuming, and I'm not going to adjust the value, your home value's probably gone up over 10 years, but just assuming that's the same for now. Your loan amount, wrapping in closing costs, and let's just say closing costs are $7,000, get wrapped directly into there. Let's say your new interest rate is now 6.5%, and we are extending back out to a 30-year term, which is going to reduce your payment by $327, which is definitely a significant savings monthly, but it does stretch your mortgage back out to 30 years. This is going to definitely be important as we look at the interest you pay doing it this way. Second option is looking at refinancing to a 20-year. Again, wrapping the closing costs into the loan, assuming 7,000 in closing costs. Again, just kind of ballpark. Interest rate's probably going to be slightly lower on a 20-year, and you can see this is 20-year. The payment doesn't go down much. I mean, it only goes down about $47 a month, but again, it keeps the payoff very similar. So give me just a second. Let me scroll down here to this screen. And this is where it really is important to look at. So on your current one, assuming the last 20 years that are left, not factoring in the first 10, the total principal that you owe is this 256,942, which is what we saw on the first screen. Total over the next 20 years, you're going to pay $477,000, which means that you're going to pay about $220,000 in interest, which is quite a bit. But look at this. If we refinance to a 30-year, again, your payment goes down by $300 something a month. Again, your principal goes up, but look at how much interest you end up paying. That comes up to $600,000 in interest over the next 30 years. And the reason that's so much higher is because we are extending it back out for an additional 10 years. So not only are you paying that 20 years of interest that you have left, but the additional 10 years on top of that. So even though you've got a lower rate, it does actually increase the interest. So you can see that you're going to pay about $120,000 extra in interest. So you're saving $300 something a month in your monthly payment, but over the life of the loan, it's going to cost you a lot. Now, the 20-year refinance we looked at, again, it didn't save much as far as a monthly payment. I think it was $47. But if you can see, the total that you'll pay over the next 20 years with this will be $467. So it's actually going to be $10,000 less. So total interest paid will be $203. So it's actually going to save you some money. So that's really what's important when you're looking at the long-term cost of a refinance. Sometimes it's great to save $300 a month because that might be what you need right now. But just keep in mind, it could cost you more in the long term. So if you have any questions about this, if you want to know whether a refinance makes sense for you, reach out. I'd love to go over your specific scenario. We can put together a chart based off of your exact numbers and see exactly where the numbers make the most sense and what would work best for you. Have an awesome day. I'll talk to you soon.